Did you know that the majority of the loans out there can be sold to a different company, a different servicer? Maybe you even have got a letter in the mail that says your loan has been sold to XYZ company and you need to start making payments to them. So just so you're aware, this is a big possibility. It usually does happen. You have no control really in when this happens or where your loan is sold to. On your loan estimate and your closing disclosure, I'll show you a clip here. There's a box that's checked that says we will sell your loan or we will keep it and service the loan. So you do know that going ahead of time. But again, we have no control over where that goes. So why does this happen? How does it work? So you work typically with a loan officer, a loan originator like myself. We close your loan. In my case, we may close your loan in my company name. We've already determined where we're selling that loan, and we tell our clients ahead of time, hey, we're selling your loan to United Wholesale Mortgage or Caliber or Direct Mortgage, whoever it may be. So you know that ahead of time. But the loan gets sold to them. They may keep it and service it for a bit and then sell it, or they may continue to service it. You never know. But what they typically do is they will sell it to someone else. And there are companies out there that are professional service companies. They may not own the loan that you have on your home, but they may employ another company that's just an expert at servicing, collecting payments, handling the taxes and the insurance. Just be aware that those are the servicing companies. This all happens because your mortgage is going to be at some point bundled together with a bunch of other mortgages and sold on the secondary market. And this is what's called mortgage-backed securities. In fact, many pension accounts have ownership or pieces of these mortgage-backed securities in there. Now, a few things you need to know about this. Number one, and most important, is that by your loan being sold from servicer to servicer, lender, the terms of your loan cannot change. They can't change your interest rate. They can't change your payment. They cannot do any of that. All that is changing is the location and the name that you're sending your payments to. Number two, you need to remember that you will get a goodbye letter from your current lender and a welcome letter or hello letter from the new one. You need to have both of these. There's enough scam, fraud, phishing things going on that you need to do this, and I highly recommend it. If your loan is sold, call up your old company, your old servicer, and ask them, hey, did my loan get sold? And they'll say, yep, it did. And then say, who did it get sold to? And they'll tell you the right and legitimate company, just so you don't get scammed and make your payment to the wrong place. Now, there is a little bit of a pain in the rear in that if your loan gets sold, you'll probably have to go in and set up new logins on their website and set up your auto pay with the new lender. It can be a pain, but it just goes with the territory. A common question is, what happens if I make my payment to my old lender after my loan has been sold? So the laws require that within 30 days of the transfer happening, they have to give you notice. You have 60 days from the time of the transfer to get your payments directed to the right spot. So if within that 60 days, if you make the payment to the old servicer, they will get the payment forwarded to the right person, and by law they cannot hit your credit as showing a late payment on there. If you have any questions on this, please let me know. We're here to help you on things. We're here to make sure that you get educated and everything goes smooth for you. My name's Miles Pitcher with Superior Lending. Thanks for watching this video.